Um, let's go ahead and get started here. I want to talk about value, my outlook on the market, etc. Before I do so, come over to ZTRADEZ.net. Check out our terms and conditions page as well as our disclaimer. If you don't agree, don't watch the video and do not join the community, which is free in the description below, as well as our newsletter, as well as our SMS to get live market ideas sent to you and watch lists. You know, value has been doing very well. High PDE names people have been rolling out of. Some of the Fed chair's comments weren't exactly, too bullish here. We have yields rising. Um, I don't necessarily trust Trump's picks. He picked Powell. Powell sucks. He's brilliant. He's smart, but he's slow. And it just matches his personality as well. Nerdy, kind of introverted, obsessed with being proper versus someone like Orange who's very entrepreneurial and gets stuff done fast. Elon and Trump are like that. They're both entrepreneurs. The academic student straight A nerds, although I respect Powell that he's holding up against Trump, although I disagree with Powell, I still respect it. Those people do not get things done very fast at all. Now, I kind of agree. I see where Powell's coming from with holding right now. His wording crashed everything in 2018. It was just a simple wording. We're going to hike rates for 4 consecutive quarters, right? He shouldn't have said that. Now, I agree that he was going to hike. We go back to 2018. They left rates at 0 for Obama his entire 8 years. Orange gets in and they start ticking them up, and then they want to tick them up more. And he's like, what? Which is good because it's a get out of jail free card if something bad happens. Something bad did happen, COVID, right? But he could have used his wording could have been different. His wording could have been, we are hiking interest rates and we'll see next quarter. We don't know. We probably won't. Maybe we will. He could have worded it something like that. He was responsible for the 2018 crash, which was a gift. 2019 was the best trading year I've ever seen anywhere. Shadowed COVID. He was too late to hike interest rates. He should have been hiking them Q1 2021, even though they didn't see inflation. They should have said, we're going to take it up a quarter point. We'll take it up. We don't know. We probably aren't going to hike again. And next quarter, they take it up another quarter point. They start seeing it full point hike. They could have done what they did in 2022 and 2021. It would have calmed things down a bit, and we could have been out of this a lot sooner. We'd basically be where we're going to be in 2027, in my opinion. But inflation, CPI has been dropping heavily. We just need shelter and food down. Moving on from that, value has been running because there's been a rotation out of high PDE names and into value. This is my best pick, in my opinion, in 2025. The technicals were gorgeous. This flag, that is a beautiful flag right here. Just gorgeous, beautiful flag, almost a pennant. And I got in on the retest, this gap fill, and we retested that trend. Look at that on the 200 right there. I mean, this is just beautiful. I picked up equity on that retest. We filled that gap. PDE was below 10. Dividend was around 8. I knew that Orange and Russia relations were going to increase. Kind of shocked that they didn't cut Ukraine off. The war would have ended, in 3 weeks if they did that when he got in. And that kind of worried me, but I held it due to the PDE and dividend. And this has just been a fantastic play, absolutely fantastic play that I've been in here. Look at that rising RSI as we're going lower on the monthly. Beautiful play on BTI, British American Tobacco. Russia was a big, they had a lot of customers, and the imports had stopped. The imports had stopped. A lot of the sales to Russia whenever under the Biden admin. I assumed it would get better under Trump, as it did, and here we are. Values running. KO, let's take a look at Coke. Coke's been blasting. Let's take a look at that without the 200 EMA on. Gosh, amazing. Amazing run. This is what I was waiting for, is that gap to be filled, and it never filled it. I should have entered on this cup and handle we kind of had right there, somewhat of a cup and handle. Anyways, Pepsi, they were in trouble, and it almost filled the gap and didn't. It just teased me, back in... it was down to 136. What? January 8th? Really? I didn't know that. And now we're at 168. That's why you got to keep your eyes on everything. Over in here is what I was looking at. I picked up a little, not enough, but KR, we can just go through all the names. Kellogg's, how's Kellogg's? Or not, KB. Okay. Retail's been doing good. I mean, just pumping. TJ Maxx, look at this, man. This is like a freaking tech stock. From 60 to 155 in a year. I mean, or no, that's over a year. We're going back to January 2023. But still, it's doing very well. Very, very well. Value's been doing well. Value's shining. We can look at high PDE, and let's get over to software. It looks like we're filling that final gap there. Right around 101. Market's bouncing right now. Now services. They're profitable, but their PDE is 70. That's the problem. That's the problem that I had. Let's take a look at it. We are on a weekly. We've cleared everything. You know, we are at that volume gap over there. That volume gap has been filled. RSI is all the way down to 21. The problem we have with software, Anthropic, Perplexity, all these companies, I wanted to get into this issue, is they can basically just copy their business model like that, right? They can just copy it in a snap of a finger. And, you know, it's really bad for the enterprise software companies, CRM now, Snow, you know, Adobe. Adobe is a value trap. The PDE is now probably around 50, I'd say, on now, but we can go to Adobe. Geez. And there's the low volume I had pointed out, which I don't know when I wrote that, but it looks like that, well, that's been filled now. Let's take a look at a monthly. Hear me out. I don't think that's happening. I just had to post that. That is the volume shelf there. Look how low RSI is, 34. Look at the earnings, though, the fundamental on this. It's just rising. I know Outlook isn't good going forward here on a lot of these names, but, you know, we've cleared the 200 now on the monthly, which is wild, absolutely wild. We filled that little volume area. If we clear this volume, you know, it's just going to get peeled back more and more. Let me move this out of the way. Yeah. 159, I don't see it going lower than that. It depends on what happens. But you look at SPY, and SPY's not even down that much. And you look at some of the other sectors, especially software, and it is healthcare, software. It has been atrocious. They have been devastated. SPY's only down just a little bit. And look at all this destruction. But this isn't because SPY's down. Software was dumping regardless. I'd like to see some of these tech ETFs rebalance. You know, allocate their funds, consolidate some of the holdings into a higher position of stocks that are not software, because the outlook is awful. And the bad thing is this. Think about this. I can't invest in Perplexity. I can pull it up right now on Equities in Hive, you know, Equity B. You can't get in it. They have offerings and they just fill up like that. And if they do have offerings, it's like 150. I suppose you could do that, but you're tying that money up. You don't know when they're going to IPO. I can't stomach that. Now, if it was 2 years ago, that would have paid off. You can get out of it in the private market still. But I can't get in Anthropic. I can't get in Perplexity. I can't get in OpenAI. I can't get in XAI. All those private companies are wrecking the public ones. So you can't invest in the ones that are you know, wrecking the public ones. So by the time they're public, they're like beyond overvalued. And then they're basically in a bubble and their PDE is way out of whack, you know? So it's a shame that I can't get in all of that and just ride that wave up. And going forward, I don't necessarily want to, you know, basically from the mid 90s to a year ago, some of the best companies weren't anything that was anything physical. Software was fantastic. Everything online, you know, because having a factory, making things, that's just all overhead, and it ruins the PDE, and the margins are razor thin on some, not all companies, but it affects all of that. You know, you have a software company, you can just mint unlimited licenses, you know, and people subscribe to it. Back in the 90s, they would buy it flat out. Now we're subscription based. The whole model changed, which is more profitable for the companies. But everyone was bashing Orange. I'll bash Orange on things that I think he's wrong on and things that he's right on. I'm not. Right? So they were bashing Orange, saying, what is this, 1980? We're going to bring, all this industrial stuff back here to the U.S. and factories? What is this? We're going 20 years back? Idiot. All services, software, all this vapor stuff's going to get eaten up by AI. We're a service-based country right now. That's all going to get eaten up next 5 years. It's going to slowly start trickling in. They already have the technology to do that now, but it's going to take a while for that to slowly bleed into everything and take effect. There's going to be all these AI consultants that go to companies. Hey, let's set you up with this software. We'll wreck this. You can cut your staff by 50%, 70%. Your profitability will go up. And so there's got to be jobs. There's got to be jobs. I'd like there to be, I know the factories, they'll be overtaken by robots, but we need to delay this stuff as much as we can. And we wouldn't be here if Clinton and Bush had the chance to stop it, but he continued it, didn't start trading with China. China, we're now competing with AI. AI shouldn't be out there in the public wrecking everything. It should be held by the military, right? It shouldn't be past like the second version of ChatGPT. Should have just stayed right there, helps us write emails, formulate stuff, do analysis, math, that's fine. But, now we have to beat China. So, but again, we're all here because of the trade deal back in the 90s under Clinton and Bush. Bush was a part of it as well. So you can thank them. Short-term gratification, long-term pain. But we need, going forward, if I'm going to be invested in software, I'm going to want it to be these AI companies, which is software, that are going to be the ones wrecking all these software companies and jobs and everything like that as a hedge against everything to come. So, and I also want to be invested in the backbone of AI. Well, if we go far enough back to the core, to the spinal cord, right, so to speak, copper. But if yields are going to be going up, then copper is going to be going down. And now if we're going to go into QE and we're going to need data centers, that's a perfect storm for CPER. I've looked at physical. I tried to buy spools at Home Depot. I should have had my buddy film me to come figure it out. And I had AI with me, and I learned about the gauge of the spools. They had it behind like this gate, and you wanted the thickest gauge. The lower the gauge, the thicker. And I found out it's not profitable. You can buy silver and gold. There's silver and gold coin stores that'll take gold and pay a hair below spot anywhere, everywhere, right? So there's liquidity, so to speak. You can exit, you can get in, and you can get out easy. You can't get in copper easily. You're paying a whopping premium, 15, 20% above spot. And then to get out of it, you can't go to a coin store and sell a spool. You go to a scrapper, they're going to pay 30% below spot. So right off the bat, you're almost down half, right? So unless it's going to go up like 150%, why wouldn't you just buy CPER? I can sell puts on it as a means to enter, and I can also sell calls on it if I own the equity, and I think it's, kind of if it did a silver-like move. So I think copper is undervalued. I wouldn't say it's undervalued. It's, it's trading at its value right now, but if we're going to compare it to 2027 with, as of right now, it's trading at value, in my opinion. If we're going to compare it to 2027 and the need for copper and the demand, which is expected to go up almost just shy of double, is what their expectations are, on top of the dollar dropping with QE, right? Then if I were to judge it that way, then I'd say as of now, looking into late 2027, that it's undervalued. I'd just like it to drop a bit more. But crypto, same thing. Bond yields are going up. Everyone, it's the Epstein files causing a crash. It's like everybody's wrong on why everything did everything that I'm looking around. It can be as simple as the dollar and bond yields. Unfortunately, I can't pull up Dixie here. Yeah. So let's just take a look at the dollar recently. And this is from some of the Fed's comments. He made some comments about reducing the balance sheet, which is a good thing for inflation. Everything's a double-edged sword. The dollar goes up, it's good and bad. Dollar goes down, it's good and bad. I think there's more benefits to having a lower dollar because that increases jobs. Employment goes up, right? Exports go up. That does not necessarily mean inflation. No. You know, maybe on foreign goods that we're going to buy, like a TV. You know, TVs are free anyways. They're like $150 at this point from China. We've seen massive deflation from when I was a kid. The flat screen box ones, there were giant boxes that were like 4 feet thick, but flat, were like 5K, and you could finance it. And there was people getting cooked where they'd come get the TV with a truck. It's nothing like they're repoing a car. Now they're free, pretty much. No one even watches TV. A lot of people don't watch TV anymore. Anyways, so that could tick up. Some stuff could tick up because the dollar versus the yen gets out of whack. Goods go up somewhat. Now you could judge it in that way. The cost of stuff would go up a bit, but if you're invested, it would far outweigh what you're going to pay depending on how heavy you are. But things move in cycles. The dollar, interest rates, bonds, the stock market, and you can see going back to Jan 2026 to now, we've been getting clapped because the dollar's been running up on things. Let's see. Jan 2026. Right? I haven't even checked this out prior. 1, 2, 3, clap. Is this 3 white soldiers, I think. This is 3 white soldiers pretty much. A drop with 1, 2, 3 candles up, each one getting weaker. Look at the bodies getting smaller. January 26, right? The dollar starts to rip after falling, and everything just sells off aggressively. So let's get Bitcoin below 60, please. And everyone's like, oh, it's the Epstein files. Why is everything falling? And it's like, well, bond yields too. Unfortunately, I can't pull that up on TrendSpider. If we had toss up, or if I could pull up something else, we could take a look at that as well. But at the end of the day, guys, the talking heads lie, the charts don't. Again, the talking heads lie, the charts don't. I pointed this out in a newsletter, right? I don't care what everyone's sending me these videos. Here's why Bitcoin will go to $1 million Q4 2020. They've been saying that since 2016, 2017, 2018. No matter whether it's bull or bear, it's going to $1 million on the way up, on the way down. It's going to $1 million. It's going to reverse. They're just perma bulls on it, which it has always gone up. But you don't FOMO in at the top and then look for a video to justify your bad decision, which is what people do. And they'll look for videos as a way to cope with their bad decisions and letting their emotions control them by spike chasing, like everyone did with silver. I don't care what any video or anyone says. I don't care. I don't chase vertical moves. It doesn't work. You can't do it long term. You can do it short term. Absolutely. You can chase breakouts. You make tons of money doing that, going with the trend where everything's going. We're still bullish. We take it again, right? Chasing the trend here. I chased this upside, but we were still pretty much in a dip, right? Look at the MACD. First green bar we got. This was October. I was in the summer of March and April of 2023 in Bitcoin. So I have it all written in the group still. Solana at 47 and 51. But and we have MACD open. We have a flag right here. I don't care about everyone who says it's going to crash. MACD is open. We have a flag. I can just listen to the TA and override everybody, right? We have reversal candles at the top over here. Just like if we go to the weekly, we want to come back. Where was it? Right there. Pretty much a shooting star. Which was the top in November of 2021 at $69,000. Pretty much, and we exceeded this top. Wouldn't necessarily call it a double top because we did exceed the high, but we're in the range of where that was. If we were to just highlight the whole thing, right? We were in that range. Oh, interesting. Look at that. That's funny. And this is right where we bounced. Again, technical analysis. Where is it hung out the most? This was resistance. This area, it doesn't have to be to the T. This was acting as support. It chopped around here for nearly a freaking year, 6 months. And we bounced right off that. We're going to end up sucking up and closing on the 200, in my opinion, here. We're going to come up and fill this low volume area to probably 82 at some point this year. But clear as day, head and shoulders on this. Again, listen to the charts when it's clear as day. Sometimes the charts don't give you anything. That one dingbat young kid who had 200 million, take out 10 million, buy an apartment complex, build it out of concrete and steel, no wood, in a very good area that's not speculative, not in the Northeast, not in California. Do it in a place like Florida with no income tax, and in a city that's growing, Sarasota or Tampa, some of the best cities to invest in my opinion. You buy the whole thing cash. You don't leverage it. You don't care. You build it the highest quality, make it somewhat luxury, and throw it in an LLC. That LLC is owned by a trust. No one can take it from you, and you live off it. Then from there, if you want to be an idiot and go full port on every play on top of leverage, which means if you're wrong once, that you don't have any money to trade with again, then you can make a stupid decision like that kid who full ported, like 100 million long on the right shoulder of a Head and Shoulders. What? And they may not have anything to show for it, like maybe an 8-plex apartment, maybe a 16-plex that he could have bought cash, right? In a trust. But it looks like we're going to bounce here. I'm going to pick up a little bit more IBIT. If we end up dropping, Bitcoin doesn't work like this, guys, where it goes to the previous support. Here's support. It's not an equity. It doesn't work like that. It does not work like that. So, we may never see these lows again unless there was like a horrific crash on everything. So it moves kind of, linear upwards like this, upwards movement, right? The lows do. Again, it's not like equities where they can dilute things like that. And it's not a business, which is a good thing. You anti-Bitcoiners, it's a good thing that it's not a business. I don't want to be invested in a business I will, but I also would like to be in something that isn't, that just runs off the mechanics of yields, right? And the dollar, because I can time it perfectly. If you're looking at the fixed income space and listening to the Fed, who gives you the cheat sheet, right? Simply buy the dips. Volume shelf area of interest right here, and we bounced. And I just accidentally stumbled across that live on here, right? Anyways, so going forward, I would sure as heck love us to fall. This has been a very long video. I would sure love us to fall. I don't know if that's necessarily going to happen any more than here. We may shoot up, but it is February. Remember, I've been saying on my videos and in my newsletters, February is coming, and I've been talking about this low volume area. We broke right there. I was like, this is it. And then they did a liquidity injection, and we sucked up, right? And then we dumped. Now, I sold Monday and Tuesday. I sold on my SOXX. I think it was Monday. I think Tuesday is where I started to exit. I took my initial investment, and I'd been in since April, this dip over here. I would sure as hell love us to drop all the way to 602. That would be a gift, but it would take something horrific if we're going to do it fast. MACD is open to the downside daily or weekly. This gap right here, wouldn't that be a gift, 570? That would be awful, but that would take a really extreme event in order for that to happen. The Fed's going to dump the balance sheet. That would be great. That would be great the second they get in. And then CPI would plummet, and it would give them the strength to cut like mad for the rest of the year. Now, I really hope this dip comes, because you will watch me lock in longs for a very long time. Last thing I'm going to talk about, PayPal. Just did a fundamental analysis on this. They are beating, but there's some issues. They've been downgraded by, I have it in the article, 3, Bank of America and Goldman Sachs, I think, and someone else. But moves like that is where I buy. I don't buy like an idiot moves like that. You need to be put in a straitjacket if you did that. What is wrong with you? I was buying over in here. I was buying over in here, quantitative tightening. The silver and metals are just pricing in the dollar going down, right? That's all it was. And then China restricted the exports of rare earths. Those that were short gave them excuse to cover. On top of the covering, massive buying came in. Oh my gosh, it's silver. It's going up because China is dumping treasuries and buying gold. They were doing that over here on freaking gold. Where were you all at? That's not why it went up, right? I have it written right here too. Rate cuts, we go up. Rate hikes, right? We go down. And this is where China was buying gold. Brilliant. You don't buy it up there. I still see upside. I still see more upside, right? But you can't let FOMO get in. I'd be looking at miners on the OTC versus gold here, buying it for a long term. What? One of the biggest moves ever, and you're going to buy it there? Come on. Rate hikes. This is your cheat sheet. You know that the rate hikes aren't going to last forever, so I can accumulate the entire time. And when you know what's coming, rate cuts. What happened after the rate cuts? I've already written this out. We took off, and it's pricing in all of them. And then after that, after it's priced them in, it may fall, but it could still have a lot of time. Just like we priced in rate hikes, cuts over here for basically 8 years of it being left at zero, yet Fed rate was nothing, but gold had already priced in the move and it dropped. This was all QE. There was some QT in here a little bit leading up to 08. Then we went into QE again and took off. QE from 9/11 and the dot-com over here, we took off, which led to the housing bubble. Video's too long. QE resumed, stimulus, priced everything in, and it went flat even though rates were already there, right? QE again, rate hikes, we dropped. This was your time to buy. We're in the middle of rate hikes, right? China's dumping treasuries and buying gold. Then I just followed them, right? You don't do it up there, in my opinion. If you guys like this content, make sure to like and follow for more.